One of the most stunning things we've seen in the market recently is the massive rise of cryptocurrencies and their acceptance into the mainstream. It really is insane to see how some of the valuations have changed and just how much they can go up and down in value in a single day. But before I get too deep into that, I want to warn anyone watching this video about scammers when it comes to crypto. Really, blockchain technologies and cryptocurrencies are a very interesting technology that is going to revolutionize the way we deal with currency. However, due to how they work, if you send someone crypto, there really is no going back. You don't have the same consumer protections that you would have with, say, a credit card purchase. So if you see anyone in the comments trying to talk about some outside program or some sort of a crypto trading telegram or other chat program, please ignore them. Don't go off this website and only trade crypto on exchanges with a long record of quality. Just something I have to get out there because the comments always flood with them. Currently, we're seeing a huge dip in the crypto market, down 12%. But when we look at some perspective, a year out, Bitcoin was trading at around 9 grand, and it's skyrocketed, hitting a high of around 63 grand. If we zoom in a bit more, we could see this day has been pretty rough on the coin. But even zooming out to a month or 3 months, we could see dips like this aren't exactly uncommon. And there is a legitimate question about, hey, are we going to see a huge collapse, a drop in price for many of these huge coins? If you look at the long-term graph, we saw something similar back in 2018. I've zoomed in a little more, but we saw a huge surge in crypto value. There was a lot of hype around cryptocurrencies, Bitcoin and Ethereum especially. Tons of people bought in, and the price absolutely collapsed. And really, it remained pretty low for quite a while. If we zoom out, we could see for years it never quite hit those highs again. And while there was certainly a lot of hype and excitement about cryptocurrencies back then, the reality is it was really a pain in the butt to deal with them, especially smaller coins. The wallet interfaces, the exchanges, and then just the general acceptance and widespread usage of crypto really limited it. In 2018, we saw a massive surge because there was a lot of hype about an impressive technology, but there really was not the backing for it to be particularly useful at the time. Now, naturally, tons and tons of people were using Bitcoin. It's not like there were no transactions happening on the network, but the price evaluation and worth had really collapsed pretty quickly. However, here in 2021, we see a lot of growth in the price and a surprising amount of stability. Yeah, there have been a lot of big drops, but people have been buying the dip. For the past 3 months, there's been tons and tons of variance, but we haven't seen that massive crash like we did in 2018. And if it were to occur, we would have spent way more time at these higher prices. There is clearly some sort of support for cryptocurrencies now. And I think if you just look at the wide-scale adoption, it makes a lot of sense. Visa is particularly huge, and they have been stockpiling a lot of different cryptocurrencies, Ethereum especially. And they've actually been using a lot of Ethereum transactions to process payments, which might sound kind of weird. Visa is all based around payment processing. That's where they get their money from. But when you consider the power of cryptocurrencies and just how many transactions they process relative to the actual cost of those transactions, even now it's pretty impressive. What you're looking at right now is a visualization of Ethereum transactions. This is all happening in real time, and we can see things like 1,000 Ethereum transaction just happened, other people buying and selling and moving in between wallets. It's pretty impressive. And we could zoom in, zoom out, look at the different blocks, but huge, huge amounts of money are just moving back and forth across the entire world. It's happening very quickly. It's just processing and going through these massive amounts of money. Really, it's incredible what it's capable of how much is stored on these blocks, how much wealth can be moved around without having to worry about international fees and other things like that. And keep in mind that a coin like Ethereum is still really in its infancy. There are still a lot of proposed updates and changes to the Ethereum protocol that are currently being planned and upcoming. I really want to say that I deeply appreciate your viewership. If you like this sort of content, I would really appreciate it if you like the video and subscribe to the channel. If you want constant notifications, just click the bell icon. There's no pressure to do so, but I would be thankful if you do it. Additionally, if you actually want to start trading crypto, there's 2 platforms that I would recommend that have a solid reputation. Weibull is a fantastic platform for trading cryptocurrencies. I've used them a fair amount, and I'm very happy with them. I actually use them a good amount as a regular trading platform for stocks and options, and I quite like them. The cryptocurrency trading is seamless, and they trade some interesting coins like Doge, which I know a lot of people are really hyped about and really like. It's a pretty funny meme coin. Personally, I'm not involved with it, but Weibull is a fantastic platform for trading crypto. And if you want to get involved with it, I'll have a referral link in the description of this video. In fact, if you sign up with my referral link in the description of this video, you'll get 2 free stocks valued up to $1,850. Personally, I think that Coinbase Pro is a fantastic interface if you want to have more involved and detailed crypto trading. You can get a great breakdown from different values where people have their orders. You can change different things like the time for each tick and candle. And you can get a detailed breakdown of what's going on. I quite like Coinbase, and they have been around for a long time. They are probably an exchange with the best reputation, and they have existed for years and years now. They also have a really great interface if you don't want the pro interface with all the trading. The standard Coinbase interface is pretty useful. It's simple and easy to use. I'll have a referral link to Coinbase in the description of this video. If you're interested, I'd appreciate it if you sign up with my link. As mentioned before, we've seen a lot of adoption from companies like Visa, but even other big payment processors like PayPal. A mainstream platform like PayPal lets you buy, sell, and deal with cryptos. You can buy cryptos for a single buck if you really want to. You can hold, sell, and just deal with them. It's pretty impressive. And it's all in a nice, neat interface. I remember dealing with Bitcoin and Ethereum years ago, and a lot of the interfaces were actually okay, but I could understand why someone like my mom or just your general consumer would have trouble dealing with them. The Electrum wallet and the Geth interface were really fantastic, but when you got to smaller coins, a lot of those wallets were an absolute pain in the butt that required syncing with a blockchain and other things like that. They were just not elegant. But now things have changed, and really, these interfaces are so easy to use. So we've seen tons and tons of adoption from retail investors because of how easy it is. But we also see adoption from big companies. In fact, there's been a lot of comments and even criticisms on how much big companies are buying and using crypto. It really is stunning how much has been purchased. In fact, one of the biggest names has been Tesla, even though they were not the first when it came to multi-billion-dollar companies buying crypto. Tesla purchased around $1.5 billion a little while back, and they sold a bit to show that it could easily be liquidated to their shareholders, but they're still holding on to what they currently have. And Elon Musk did try to have Teslas be purchased with Bitcoin. However, currently he's saying that they're going to hold off on that until Bitcoin has more green energy usage, because Bitcoin obviously utilizes a lot of power. It is decentralized mining, which means all the actual computational power needed to do transactions is decentralized between a bunch of computers doing pretty complex math problems. Well, not necessarily complex, but they're processing all of it. Yet they do say that they're not going to be selling any more Bitcoin, and they certainly seem to want to hold on to what they currently have. This has been a big controversy for a lot of cryptocurrencies, but especially Bitcoin, which has a very primitive way of mining and dealing with its decentralized processing. There's other techniques that use a lot less power, like proof of stake, which Ethereum is trying to move to. But there's also a lot of pushback on the actual energy usage of cryptocurrencies like Bitcoin. Now, certainly Bitcoin.com is a little biased, but they do make a pretty big argument for the actual energy consumption of Bitcoin compared to the energy consumption for other payment processors. Remember, big companies like Visa or PayPal or MasterCard, or even just generalized banks, they have huge, massive computational servers and other infrastructure for dealing with and processing payments. They have physical branches that require concrete to build, people to fill, lights to be lit. So the actual comparison when it comes to cost is pretty complicated. It is a lot of involved considerations that you have to think about. And I certainly don't think it's necessarily fair to say that Bitcoin or Ethereum use way too much power. Granted, it does seem like proof of stake is the future, and that a lot of major coins like Ethereum are trying to move that way. But for the amount of work actually being done, for how many payments it processes, it's actually not that unreasonable for the amount of work it does, especially when you compare it to other more traditional payment processing methods. And of course, there is the major consideration that renewable energy is just becoming more and more common. It's becoming more and more popular. So naturally, anything using electricity like Bitcoin miners are going to become more and more green, for lack of a better word. And keep in mind, when it comes to mining, some people live in cold climates and want to heat their house. Well, if they're using electric heat, it would make more sense to mine on their computer and generate heat that way, since they would be making money off that and helping assist with the decentralized network, and it would just make a lot more sense than using typical resistive heaters. But there really is no denying that Bitcoin has a lot of support. Tons and tons of huge major companies are buying a lot of Bitcoin. Tesla is a huge one. There's a lot of notes about that. Galaxy Digital Holdings has millions of dollars worth of Bitcoin, at least at the time this article was written. And MicroStrategy has been one of the long-term bulls of Bitcoin. They have around $2.19 billion worth of Bitcoin, and they've had theirs for well over a year now. Square, the payment processor, also has millions of dollars of Bitcoin. And these are all big mainstream companies with huge market caps. The adoption is going very well right now. But there is also a consideration for, is this just the early phase? Is Bitcoin or Ethereum going to double in value a couple years from now when everyone is using it? Well, that depends. There's a lot to read and interpret about Bitcoin usage in these companies. I think Tesla's papers and comments on it are actually pretty fascinating. I know an SEC filing is not particularly pretty to look at, but there is a lot of good information here. Really, the big points they bring up is, 1, inflation is a standard. It is a given in the US. The US operates based on inflation and debt. So it doesn't make a lot of sense to have just a lot of raw money sitting around. You ideally want to invest that money somehow and fight inflation at the minimum. At the maximum, make a fair bit of money off your investment rather than just having cash sitting around. However, if you need to liquidate your investments to buy something or use those funds, it can be a real pain in the butt. And crypto is a very interesting way of dealing with things like inflation, market instability, and other things like that. Granted, it is pretty volatile, but Tesla commented that the second they said they bought Bitcoin, Bitcoin soared in value and has stayed above their buy price because people saw a major company had purchased it. And that is a good point. Additionally, they mentioned that they don't have to pay taxes on their Bitcoin until they close out of their positions, until they change it back to fiat or purchase something with their Bitcoin. So really, you have an asset that is separate from fiat currencies, which are at risk of inflation and other things like that. You get more support for the currency when you announce that you're using the currency. It's incredibly easy to liquidate. You can do it instantly, basically. And you really don't have to deal with complex taxes and other problems like that. You just pay your capital gains tax once you liquidate your position or purchase something with your Bitcoin. So they do make a pretty strong case for companies actually utilizing cryptocurrencies, for having a store of value, especially when there's uncertainty about the market. And really, there's a lot of concern about things like inflation. It's hard to get a 100% accurate number, but you might have seen a lot of articles talking about how 1/3 of all US dollars in circulation have been printed within the last year. And when we look at the M1 money supply, it is a little crazy how much has been printed. These huge multi-trillion-dollar bills, there is an absurd amount of money out there. It really is stunning, especially when we compare it to these previous years. Now, granted, we basically almost always have inflation, but normally that's around 2% or so. This is really stunning just how much money has been introduced to the economy. It's just a huge spike up. Really, it's completely unprecedented in the history of the United States. And while a lot of articles try to say things like, oh, we don't have inflation or other things like that, the cost for a lot of raw materials has just been continuing to rise and rise and rise. Building materials have soared tons. In fact, it's really crazy. You know, if you've gone to a Home Depot or Lowe's, a lot of people are doing home improvement. Lumber costs have increased by around 300% now. Plywood has surged in value. In fact, a lot of these numbers are a little outdated now. It's just continued to go up. And when we look at the actual pricing of a lot of these goods, it is really crazy how much things like laundry equipment or home supplies, major appliances are just way more expensive. Basic fuels like propane, kerosene, and even firewood have gone up in price. Tons and tons of food items have gone up in price. Used cars and trucks have been insane. If you've paid any attention to the used vehicle market, you could tell that prices are absolutely ridiculous right now. And we have seen some reduction in things like formal wear, women's dresses, men's suits, public transportation, things like that. Airline fares is pretty major. If you want to fly right now, it is very, very cheap, and you go through security really quick. It's actually pretty nice if you want to do any traveling. Unfortunately, a lot of places are closed off. But consumer and retail prices are just out of whack. It really is stunning. And even now we're seeing gas shortages and other complications. It's really a nightmare. Granted, this is only really in certain states, but this is a huge population of the US. Like, prices are just out of whack and rough. It is difficult if you want to do something as simple as drive to the grocery store and buy some food or a new washing machine, because gas is way more expensive. Tons of food items are way more expensive, and appliances are way more expensive. And on top of that, your savings accounts that you have tucked away, those thousands and thousands of dollars, are slowly becoming less and less valuable. So there's a big concern when it comes to things like inflation, and it's not particularly unfounded. A lot of people are taking a look at these cryptocurrencies as a way to hedge against inflation. Not to mention all the pretty impressive functionality involved in newer coins like Ethereum, which is the second largest cryptocurrency by market cap. It deals with smart contracts, which are really just contracts that are completely programmed in. You see the code and software and everything. So you could have something like paying your electric bill on a smart contract where you know the terms and they can't be changed at all. However, that does include other issues and problems and concerns where, well, what if there is a global pandemic or something and you can't make your power bill this week? Is there any nuance to that? You can't change the contract. That's where other coins like Chainlink come in, where they deal with Oracle services that help attach a huge crypto blockchain to the real world and hopefully decentralize it. And obviously, prices are very, very volatile. In fact, as I've been doing this video, you've probably seen Ethereum drop hundreds of dollars, and now it's come back up. We saw a huge drop and some pull up. Cryptos do have a lot of volatility, but with how many companies and people are bullish on the technology and willing to buy the dip, it does really look like over the long term, they're just going to keep increasing in price. Since because of how they're utilized and created, brought into existence with mining, they are produced at a consistent rate. We know what the production is going to be like. We know what the software updates are going to be like. We know there's going to be a transition to staking that is going to dramatically reduce the amount of power needed to process these transactions. And we know no one can just print an absurd amount of money instantly. They can't just print crypto into the world. And assuming there is some big concern with a wide-scale scam or other things like that, there are methods for hard forking away from the scammed chain, which is exactly what happened with Ethereum Classic, ETC versus ETH. Ultimately, when you're dealing with crypto, there is definitely uncertainty. There are wild price fluctuations. But at the same time, the technology and adoption just seems so robust right now. Again, if we go out to our 3 months, there's been a lot of support and resistance when it comes to Ethereum. Is that to say it can't drop anymore or that it won't plunge at all? Not necessarily. It's going to be a volatile asset. But personally, I think within a year or two, it's absolutely going to be trading far higher than $4,000. And for those that don't know, you can buy very small amounts of Ethereum. You can buy less than one. And this is true of almost every cryptocurrency. So technically, you could even buy some with like 12 cents. And more investors are suggesting that you should maybe have 6 or 1% of your portfolio in a cryptocurrency like Bitcoin or Ethereum. Granted, that's a relatively small amount, but people were saying this in 2019. And obviously, if you were buying 1% of your portfolio in cryptocurrency, that would have paid off very well. So while there may be corrections and concerns, it does seem like there's a lot of faith in crypto. My biggest suggestion would be that if you're getting into cryptocurrency, you can't be too emotional. You see huge price fluctuations. It happens. And you need to be willing to sit through for the long term, for at least a year. If you're interested in investing in the market with self-directed trading, a fantastic way to start is with Weibull. If you sign up now using my referral link in the description of this video, you'll get 2 free stocks valued up to $1,850. And these stocks are selected from companies like Facebook, Starbucks, Snap, Google, Procter, Gamble, and more. All the money in your account is yours to invest, trade, and withdraw as you please. There are 0 fees associated with depositing money. You just get your stocks and you'll get your buying power immediately. So if you want a fantastic brokerage with mobile, desktop, and web trading, just use the link in the description below.